Someday we'll write stories like this about Bitcoin, but it's, to me, I think the impact of Bitcoin on the world economy is very similar to, the impact of, say, the Industrial Revolution of the late, the post-Civil War kind of era in America. It's going to be enormous, because I think, I just think it's going to be enormous, and I think it will get adopted. People are adopting Bitcoin as a savings technology. So, obviously it has this finite supply. It is well distributed. It has 15 years of being distributed broadly to people. It has gone through 4 actual crashes so far.
In this video, we meet Fred Krueger, a mathematician and Bitcoin enthusiast. Fred delves into the intricacies of Bitcoin and the power law, forecasting its future up to 2026. He examines crucial factors that will shape Bitcoin's use cases and adoption. Fred addresses why Bitcoin will continue to grow and explores its significant implications on price. Fred presents his 5 key reasons for this anticipated growth. As we bring clips from the video, take a moment to like, comment, and subscribe to our channel to stay updated on market trends and more insightful content. Your engagement helps our channel grow and brings you more valuable information on the future of Bitcoin and digital assets. Thank you and enjoy the video.
And every single day, Bitcoin is being adopted as a savings technology. Now, how can we measure that mathematically? Well, we can measure the number of Bitcoin addresses with a cutoff amount of Bitcoin. And that cutoff can be expressed in dollar terms, or it can be expressed in Bitcoin terms. So just as one example of that, I posted here the amount of Bitcoin addresses with 1 Bitcoin or more in them, right? And I put that in log terms here. So it's always very important to look at log terms for all the analysis you're going to do here. And for whole Bitcoin, the power is about 1.4, right? So it's growing as 1 time to the power 1.4. And that's the right thing. So I also have a link in here to sort of a document called user growth, which you can open. And I have different cutoff lengths. So here is at 0.1 BTC. Oh, let's see, make sure this is actually going live. Okay, no, this is not going live. 1 second. Okay, so this thing you can see Bitcoin addresses with the 0.1 BTC. And again, the correlation is just off the charts, 97% here. Bitcoin addresses with 1/100th of a Bitcoin with a million sats. And R squared is 0.98. And here's the one that I just showed you. The 1 Bitcoin with R squared is 0.987. And here's an interesting thing also, just kind of an oddity, which is if you graph these 4 numbers, right, they actually also form a power law, an inverse power law, right? And here's, for example, the 1 Bitcoin addresses with 10 Bitcoin in them, right? And it has a 0.62 power, right? So that's that, okay? So we know now that, and the other thing I would like to point out here, just one little last thing, is if you look here, this thing is just going up pretty steadily in good years, bad years, etc. So adoption is growing kind of regardless of the markets. So even in good markets and bad markets, people are adopting Bitcoin. The halvings, they were a critical part of Bitcoin's design, right? To have the halvings and the parameters of these halvings. So to have it sort of mined at the rate that Satoshi chose to mine it at, and which is sort of the halving every 4 years. And this was Satoshi himself said, this is an educated guess. It works out that by January of 2013, half the Bitcoin was mined. And so this was very, very important at the very beginning to jumpstart the network, is, this incentive that you can mine and you're going to get these coins really early. And, by the fourth year of operation, right? So 2009, 10, 11, and 12. After 4 years, half the Bitcoin supply was mined. Now, as of now, 94% of the coins have been mined. So, and we're only having about 0.8% of the total final supply that's going to be mined next year. So it's going to impact things as much as it is. And Giovanni has pointed out here that, and I think this is really, really important, that the scarcity itself is not what drives Bitcoin growth mathematically. And he's got this great post here. I'll share this post here, where he basically says, let's take supply out, right? And let's take out illiquid supply, stuff that hasn't been moved for, I think, a year or maybe more, right? And so what is left is what we call available supply. Now, the available supply certainly is impacted by mining shifts, right? As we mine, that increases the available supply. And as long as it's not going into sort of super long-term holders, that's available supply. But we'll notice that this is almost completely random. There's R squared is 3%. So it's just complete noise. So there really is no correlation between available supply and price. There really is cyclicality in the data, right? So is this due to halving? It might be due to the halving being psychological. These things definitely were very important beginning, right? The first two in particular, right? Are we going to continue like that? I have no idea, right? But there's cyclicality to this data. And I think this chart from my upcoming book with Ben Sigmund is a pretty good example of that. We have 3 good years, 1 bad year, 3 good years, 1 bad year, 3 good years, 1 bad year. We're on to the second year. Typically, this third kind of year is pretty good, right? In the previous cycle, all the returns came in the second, year in 2020, right? Not so much in 2021, but in 2017, obviously, was a monster year. In 2013, it was a monster year. So, lots of room to believe that we're going to have some big move in the next 2 years. So, I'm not denying that there is clear cyclicality in the data. Some people have said, Fred's halvings don't matter, that you don't understand cyclicality. No. There's definite cyclicality in the data. The Bitcoin is used and always has been used for large transfers. It is not a Visa network. It's not a payment network. And a lot of people get really confused on this. So let me just point the tweet out here. And you can see here. So in 2009 to 2013, the average Bitcoin transaction was between 10 and 100 Bitcoin, right? So it's not very, in 2010, you see transfers of 100, 200, 500 Bitcoin. No big deal. And that moved down to about 1 Bitcoin between 2013 and 2017. And now we're down to about 0.1 Bitcoin or less, right? And so the key takeaway here is that in all cases, you're about $2,000 to $5,000 per transaction, right? Or let's just say $1,000 to $5,000 per transaction. So on this kind of size, it doesn't really matter if it's $1 or $10 in fees. You're doing a transaction of 5,000. You don't care if it's $1 or $10 in fees. It's really, this is comparable to a wire transfer network. Or it's a settlement layer. It's just a better form of wiring money. And it's really all about the security of the Bitcoin network. The fees are immaterial. I think a lot of people get caught up on this and they start thinking Bitcoin won't work because of this, because of that. Well, what won't work is the payment side of Bitcoin, which really has never worked yet. Now, I do think it will work. I do think layer 2s and Lightning, and there are plenty of other solutions for this that will work. It's just not where it's at right now.
In other news, Germany is continuing its large-scale sell-off of Bitcoin, which could flood the market with more Bitcoin. Despite this, Bitcoin has shown remarkable resilience. This trend indicates what's coming next. It's typical for Bitcoin and other cryptocurrencies to experience dips of 40 to 70%, which has happened in the last 3 cycles, followed by potential surges to new all-time highs. Invest Answers on X recently posted about this phenomenon, noting how incredible it is that Bitcoin's price has remained so resilient following these sell-offs. And the post says it's incredible how Bitcoin price has remained so resilient. The recovery starts now. Meanwhile, YouTuber Lark Davis commented on the current sentiment towards Bitcoin on his X handle. And the post says the sentiment at Bitcoin is more bearish than when Bitcoin was at $20,000. Sometimes people fail to see the big picture. Let's move on to Fred Krueger's analysis, focusing on his 5th power law. Fred presents 5 compelling reasons why the next bull market for Bitcoin is imminent and explains the underlying causes.
If you go, and this is an old tweet I made, and Stephen Paranode noticed this, but what you will see here is you never go 2 standard deviations to the downside. Doesn't mean that it's impossible to go 2 standard deviations, but here's the 2 standard deviation to the downside thing. And you can see we're really not hitting it. On the other hand, we are hitting the 2 standard deviation to the upside a couple times, right? So, this thing tends to be more skewed to the upside. Okay, why is that? I don't know. I guess when people get bullish, they just go completely crazy. And where people get bearish, there is a solid buy support line, right? Someday we'll write stories like this about Bitcoin, but it's, to me, I think the impact of Bitcoin on the world economy is very similar to, the impact of, say, the Industrial Revolution of the late, the post-Civil War kind of era in America. It's going to be enormous because I think, I just think it's going to be enormous, and I think it will get adopted.
What do you think about Fred's analysis and predictions? Did you find the video valuable? Please share your thoughts and observations in the comments section. Don't forget to subscribe to the channel and give this video a thumbs up. Thanks for watching.